when both US cash and Asia futures implied oil position long together. Is this trend confirmation or execution setup? When semiconductors outperform broad tech, while financials struggle and energy breaks hard, is this growth only recovery? When Korea commits 31 base points harder than Japan and Shanghai bids only one third as much, is this regional unity or divergence? When volatility crashes and the entire yield curve declines while crude stabilizes, is stagflation unwinding or just pausing? When three regional markets hold identical conviction with Korea most aggressive, can this relief sustain through a full session or exhaust? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look. Let's get into it. S&P 500 closed up 118 base points. Nasdaq Composite closed up 196 base points. Dow Jones closed up 66 base points. Thus conviction across all index. Cash closed with sustained strength higher. But here is what happened after the bell. Nasdaq futures repriced to plus 1 base points. S&P futures to plus 2 basis points. Dow Jones futures flat at 0. Futures barely repriced tonight. That's the first signal. Cash much stronger than futures overnight. Then Asia saw both signal strong cash and flat futures and held long positioning. Nikkei futures implied up 2.43%. Korean futures implied up 2.74%. Shanghai Composite futures implied up 0.95%. Hang Seng futures implied up 0.82%. Australian futures implied up 0.50%. Asia didn't follow flat futures. Asia held long conviction across the region. Thus, institutional commitment saying US relief is sustained, not tactical bounce. Crude oil stabilizing up 39 base points. Overnight is the second signal. That signal stabilization tells you commodity markets are accepting a relief narrative. The demand destruction concern from prior session is passing. Relief is holding. Which sectors are actually being bought into this sustained relief? That's what sector leads confirms. Technology ETF up 160 base points. Semiconductor index up 204 base points. That 44 base point gap tells you semiconductor are reading relief. That's strong growth conviction. Institutional capital believes semiconductor demand recovery is sustained, not tactical. This is growth recovery building. Financial ETF up 23 base points. That's positive but muted. Financials only hold when fear is leaving completely. Tonight's modest hold tells you institutions are still cautious about rate sensitivity, even as relief continues. Asia's financial stocks will feel that gap then when they open because global institutions are taking profits on financials while buying semiconductors. Healthcare ETF up 58 base points. Material ETF down 34 base points. Energy ETF down 203 base points. But crude up 39 base points. That contradiction is the real story. Copper down 2 basis points. Energy equities breaking hard with crude stabilizing and copper flatline tells you institutions are rotating out of energy equities but accepting commodity stabilization. Gold up 25 basis points. Confirm fear premium is gone. Asia's institutions need to decide are they following crude stabilization or energy equity breakdown. Asia's regional picture shows Korea raiding relief while Shanghai remains selective. Nikkei futures implied up 2.43%. Japan holds conviction. Tokyo sees relief as structural. Korean futures implied up 2.74%. Seoul maintains 31 base point advantage over Tokyo. That's aggressive positioning, signaling Korean institutions believe relief is sustained. Hang Seng futures implied up 0.82%. Hong Kong holding light. Hang Seng Tech futures implied up 0.62%. Tech positioning aligned with the relief. Taiwan futures implied up 2.37%. Semiconductor recovery positioning confirmed. Hang Seng financials implied up 0.95%. Hong Kong's financial sector holding. Shanghai Composite futures implied up 0.95%. China's bid is one-third Korea's size. Shanghai's selective positioning tells you Chinese institutions are not fully committed to relief. Shanghai is holding, but not betting hard. That matters when Tokyo opens. If Shanghai's light bid becomes contagion signal, the regional divergence becomes structural. Australian futures implied up 0.50%. Australia holds smallest positioning. Australian dollar up 46 base points confirms Australian capital commitment. Chinese currency down 11 base points. Yuan holding tells you China's selective positioning is intentional. Volatility index down 397 base points to 18.36. Fear is almost gone. That tells you institutions see relief as confirmed. 10-year treasury yield down 95 base points to 4.25. 5-year treasury yield down 117 base points to 3.87. 30-year treasury yield down 65 base points to 4.86. 13-week treasury up 25 base points to 3.61. The entire long end yield curve is declining sharply. That's accelerating flight to safety confirmed. US dollar index down 26 base points. Yen down 34 base points. Safe haven currencies selling confirms risk appetite is returning. Australian dollar up 46 base points confirms committed move into risk assets. That currency pattern tells you institutional capital is fully committed to risk on. Crude oil up 39 base points. Stabilizing is the confirmation signal. Gold up 25 base points. Copper down 2 basis points. Barely moving. Commodities holding tells you the stagflation setup from prior session is unwinding. Crude's stabilization says demand destruction signal was overblown. Gold and copper holding says inflation premium is still there, but fear of stagflation is fading. Asia opens into a pure growth recovery setup now, not stagflation. That changes sector positioning entirely. Nikkei futures implied up 2.43%. Is Japan's relief conviction. Tokyo's bid is tied to fear declining and growth recovery narrative. If Tokyo opens and extends relief, institutions are stepping in. If Tokyo opens and bid evaporates, overnight moves were just algorithmic rebalancing. Japan's leadership commitment tells you institutions believe relief is sustained. Watch Tokyo's opening volume. Korean futures implied up 2.74%. Is Seoul's aggressive relief bet. Korea's 31 base point advantage over Tokyo signal Korean institutions are betting hardest on relief sustainability. If Korea stabilizes, Tokyo's bid both commit. If Korea rolls, if tells you Korea saw exertion, Japan missed. Korea's aggressive positioning is the execution risk through the session. Shanghai's composite futures implied up 0.95%. Is China selective relief play? Shanghai's small bid while developed Asia commits tell you Chinese institutions are not convinced that a relief is structural. Watch Shanghai's opening sentiment. If Shanghai opens and extends higher, relief bid spreads regionally. If Shanghai rolls back, it signals China's demand concern override global relief narrative. Australian futures implied up 0.50%. Australia participates but smallest. Crude oil stabilizing up 39 base points. Must hold through session for Australia to confirm. Watch crude's opening momentum. If crude extends higher, Australia gains conviction. If crude rolls, Australian weakness becomes a regional pressure signal. That was signal's pivot point. The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am Jay. See you in market.